Were we due for a pullback this week? Absolutely. We got very overbought. I've been telling people that. But I think it's a mistake to read too much negativity into this stuff. For starters, you can't really take your cue from the oil market because the oil market is insane. The oil futures contracts that were due to settle today collapsed after some rookies who didn't know what they were doing got fleeced. All the traditional storage areas for crude, whether it be tankers in Cushing, Oklahoma, or those giant tankers on the ocean, well, they're pretty much full. And the rookies didn't know that. More importantly, though, the oil producers are totally disconnected from reality, and this is what really matters. I've been telling you that we're pumping way too much in this country. The oil market's been saying the same thing, but the producers, they have not been listening. We know that the traditional buyers of crude have all been set back by the pandemic. Last night, we spoke to Rusty Brazil of RBN Energy. He's the best oil analyst on earth, bar none. This is the guy who predicted oil Armageddon for yesterday. He got it right, and he told us that this decline is 85% because of the virus. In any other industry, literally any industry, when demand evaporates, what you do, you cut back production. Think Levi's, when they keep sewing jeans and people stop buying them, Nucor would make all the tons of steel if nobody wanted it. Scotts Miracle-Gro would cut back on their fertilizer if Home Depot said no thanks. Micron has repeatedly shut down production lines for chips rather than take pricing below the cost of production. But not the U.S. oil producers. As oil prices collapsed earlier this year, did they pull the plug? No. Did they cut back? No. Did they look at the pandemic and shut down their wells? No. Did they agree to cut production so as not to overwhelm the commodity markets and cause dislocation like we had yesterday? Not a chance. They just kept pumping and pumping, pretty much the same record amounts they were pumping last year, roughly 13 million barrels a day. That's astounding, and it's ridiculous. When your product's in glut, you stop producing, or at least you cut back, regardless of the near-term damage it might do to some wells, especially when it costs so much money for you to store the stuff. You can't just dump it in the ocean or ship it somewhere if it isn't needed. Unfortunately, our oil industry doesn't seem to know how to turn the spigot off. It needs to be turned off for them, and it probably will be in bankruptcy. The fact that oil out 3 years is trading at $40 a barrel shows you the short-term nature of the situation, the dislocation, and the insanity of it all. Everything's complicated by this ridiculous thing called the USO, which is an exchange-traded fund that takes your money and uses it to buy oil futures contract. This silly darn thing owns 23% of the entire May oil contract that crashed. It probably drove a lot of the decline. Every time the price of crude oil gets hit, it drops, the USO has to rebalance and sell. So it's a vicious circle. It could be a washout, which is why the darn thing plummeted to $2 and change today. The USO is a flawed instrument caught in the crossfire of overproduction. It won't stop going lower until the producers are shut in. It should never have been invented or allowed, but no one ever seems to want to interfere with trading. Not that when it generates too much money, it traded almost 1 billion shares today.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.